The first asset we will be looking at this morning is going to be the USOIL spot. And so far this week, we've done pretty well on this asset as we've capitalized on both buying, selling, and lately we also had another buy position triggered during yesterday's trading session. And for educational purposes and the sake of those who missed out on our earlier editions from Monday to Wednesday, let's run through what really happened at the beginning of the week that led to the decisions we made. So at the beginning of the week, remember we had our key level, which was duly cited around the $81 area due to the fact that this zone had played a major role in determining the direction of price action in the last couple of months. Now, for the sake of clarity, let's look at the 4 hours time frame together and see how important the $81 level is. Now, remember here on the 4 hours time frame, we did observe that price action was finding higher highs and higher lows after considering the character of price action since the beginning of this month. And to emphasize the strength of the buyers, we have a couple of ascending trend line in place, as you will see here. And you know how we use our ascending trend lines. As long as price remains above our ascending trend line, we shall continue to look out for patterns and structures that supports the idea of buying that asset. Now, with the situation we have here, we had another level which we were supposed to use to guide our trading activities for this week, and that is the $81 area. Now, this level here had played a major role in determining the direction of price action in the last couple of weeks. As you will see here, I think during the second week of this month, this area was a strong selling niche. Then we saw price break out of the structure, retested it the second time here, then price broke down again, and we saw that area served as a selling niche for a while before it was broken again during the first day of this week to trigger that first buy position we took. Now price action was back into the structure, climbed above it again, lining up with that ascending trend line, which further emphasized the strength of the buyers in this market. And you know how we use our key levels in this community. As long as price action remains above our key level, which in this case is the $81 level, we want to be looking out for patterns and structures that supports the idea of buying the asset. Now, with this simple idea we have on the 1 hour time frame, so we scale down into the 1 hour time frame where at the beginning of the week, we saw our price action was oscillating around our key level at the $81 area to form a range bound structure where price was confined within the $81.13 level and the $80.70 area to emphasize the prevailing uncertainty in this market during the first 10 to 12 hours of this week. And usually whenever we have this kind of range bound structure, we want to exercise patience and wait for price action to either break down the support line of that range to give us an opportunity to sell, or the breakout of the resistant line of that range to give us an opportunity to buy. And during our live session on Monday, considering the fact that price action was trading above our key level, we were looking out for buying opportunities at these two levels, the $81.13 area and the $81 level. So we had our first buy position triggered there. Then we added more positions at the break out of the $81.70 level. And of course, I did mention that we move all stop losses to secure that current buy position at that time. After moving our stop losses, we were taking out with some profit, I think over 150 pips from 3 buy positions on that one. So as of the second day of the week, we were doing very well on this asset. And during our live session on Tuesday, I did emphasize here that we may likely be seeing a retracement move of that impulsive leg that started this week. Now, what I said here is that if you look at the structure, you will see that price action was finding selling pressure as soon as it got into the $82.25 level, and subsequent attempt reveals that buyers are, while losing that momentum, resulting into some series of lower highs. And we did mention here that if price action drops below the 81.70 area, we may likely be seeing a bearish move to the downside, and that I wouldn't be selling unless the key level at the $81 area is broken to the downside. So we had a sell position triggered here yesterday on Tuesday, though the move did not last long as we saw price come back into the entry point. Now, during our live session yesterday, we were around and below that $81 area, and I was of the opinion that price retesting the $80.70 level will welcome buy positions for us, considering the fact that price action was sitting above our ascending trend line. Remember, the ascending trend line we identified on the 4 hours time frame, which is right here. And you know that as long as price remains above the ascending trend line, we want to be considering buying. So we bought again at the $80.70 level, added more positions at the breakout of the $81 area, and as at this point we are having 2 buy positions active, running into about how many pips now? About 120 pips thereabout. And for those of us who capitalized on this opportunity, well done and kudos to you. So as it is right now, it is appropriate that we move all our stop losses to secure the current buy position as we begin to notice some bearish pressure resume around that $81.70 level. Now, one interesting thing about the $81.70 level is the fact that it also shares a confluence with this descending trend line following price action hitting that new high at the $83 area. Now, due to this, we have, due to the series of lower highs, we have this descending trend line, which will be serving as a yardstick to guide our trading decisions for today. So if the continued selling pressure happens around this area, we may likely be seeing price action drop to the downside. And in fact, if we look at the fundamental perspective, that is the factors behind the scenes which has been influencing the behavioral patterns in this market, you will see that the failure of price action to surpass that $82 zone since the beginning of the week. This is this zone right here. You can see it has been a strong selling niche since this week started. So the inability of price action to surpass or break out of this zone, coupled with the US dollar's rebound and an unexpected surge in the US crude and crude oil stockpile, may be hindering further upward movement in price action. Now, yesterday night we had this hawkish remark from the U.S. Fed Reserve policymaker, that is Wallace, who his comment boosted the U.S. dollar strength a little bit against other currency, potentially dampening oil prices as it makes this dollar-denominated oil expensive for non-US dollar holders, hereby reducing the demand for oil. Now, will this demand continue to reduce at this point? That's the question right now. So this descending trend line here is going to be playing a major role in guiding our decisions. If price breaks and breach this descending trend line, we shall be looking out for more buying opportunities at the breakout of the $81.70 level, and looking forward to adding more buy positions at the breakout of the $82.25 level. However, if continued selling pressure persists below the structure, where we see any form of reversal pattern here, we could be seeing price drop to the downside from here. Now, from the report yesterday from the Energy Information Administration (EIA), the U.S. crude oil inventory unexpectedly rose by 3.165 million barrels, reversing a previous decline of 1.952 million barrels. Now, this unexpected buildup in inventory further adds to the downward pressure on oil prices. However, in as much as the idea of selling is still in the air, we cannot ignore the escalating geopolitical tensions in the Middle East and between Russia and Ukraine, which is still heightening concerns about tighter global supply, limiting the downside of oil prices. So, with this factor here, we need to have a balanced perspective to guide in our trading decisions today, as market participants will now closely monitor the release of the gross domestic product annualized for quarter 4 from the United States. And we are also expecting some other factors, since this is a US denominated asset, from the US economic docket to guide our decisions for today. So in light of this development, ensure all buy positions are closed, while we shall be using this descending trend line as a yardstick to guide our next move. I personally have a buy stop order which appears to have been triggered right now at the breakout of the $81.70 level, and of course be looking out for more opportunities to buy at the breakout of the $82.25 level. And if price goes ahead to continue, a further breakout of the $83 area will be welcoming more buy positions in this trade. So I encourage us all to mark out these levels, as we shall be needing them as a yardstick to guide any bullish idea from this juncture. However, if we get taken out of all our buy positions here, as price respects this descending trend lines and continue to find selling pressure below the structure, I'm of the opinion that a breakdown of our key level at the $81 area, and remember how that key level shares a beautiful confluence with that ascending trend line we spotted on the 4 hours time frame. Now, if price breaks down our key level at the $81 area, we shall be looking out for selling opportunities at the retest of structure to join the decline to the downside, and a further breakdown of the $80 mark will be welcoming more selling opportunities. So I would like us to mark out these levels on our chart. One, the descending trend line. A breakout of the descending trend line is welcoming buy positions for us. As long as price remains above the descending trend line, we feel comfortable in a buy position, while a breakdown of the $81 level will be welcoming selling opportunities, as price would have breached and broken that ascending trend line we identified on the higher time frame. So it's a simple setup we have here on the USOIL spot. Ensure you move all your stop losses on the current buy positions while we wait for new opportunities to emerge. If you have any questions whatsoever as regards to this illustration, or you need some further clarifications, feel free to let me know in the comment section,